Here's the pitch. Buy Apple, Tesla, even shares in a private company like SpaceX, on-chain, any hour of the day in whatever fraction you want, settling in minutes instead of days. No broker, no borders. It sounds like the stock market finally got an upgrade. But there's a line in the fine print that changes everything. A lot of the time, the thing you just bought isn't actually the stock. A tokenized stock is a token on a blockchain built to track the price of a real share. Apple, Nvidia, an index fund, whatever the issuer lists. When the real share moves, the token is designed to move with it. And that part usually works. So the question that matters isn't whether the price tracks. It's what you actually hold when you hold one. Because not all of these are built the same way. The cleanest version is wrapped. A regulated custodian buys the real shares, locks them in custody, and issues tokens against them, backed one for one. Kraken's xStocks and Coinbase's onchain stocks work roughly like this. There's a real share sitting in a vault behind your token. Then there's the synthetic version. No shares behind it at all, just a smart contract and a price oracle mimicking the stock's movements. The collapsed mirror protocol did exactly this years ago, and it ended in regulatory tears. And the rarest version is native issuance, where a company puts its actual equity directly on-chain and the token simply is the share. Almost nobody does that yet, because the law hasn't caught up. Here's where the fine print bites. Even in the clean, fully backed version, holding the token usually does not make you a shareholder. Read Kraken's own disclosure and it says it flatly. Holding the token conveys no shareholder rights, and it is not the same as owning the share. No vote. Often no direct claim on the company, just a claim on the issuer, who holds a claim on the share. Dividends might pass through to you, or might not, depending entirely on how that one product is wired. You're trusting a custodian to actually hold the shares, and an issuer to actually honor the token. The blockchain part is trustless. Everything propping it up is not. If you want to see how thin that wrapper can get, look at what happened when Robinhood handed European users tokens labeled OpenAI and SpaceX. OpenAI went straight to social media to say, in effect, "These are not our equity, we didn't approve this, be careful." One of the most famous founders in tech summed up the whole category in 2 words, calling that equity fake. And the tokens weren't shares. They were exposure to a special purpose vehicle that supposedly held some shares. A wrapper around a wrapper around a maybe. For a public company like Apple, tokenizing is mostly plumbing. For a private one, it's a legal minefield. Which brings up the question most people actually have. Can you even buy these? If you're in the United States, mostly not yet. The big products are geo-blocked out of the US. Coinbase launched its version for non-US users first, then started asking regulators for the green light to bring it home. The reason is simple. The regulator's view is that putting a stock on a blockchain doesn't stop it from being a stock. Same securities laws, same rules. There's talk of an innovation exemption that could crack the door open. But as of now, the most hyped products in this space are built for everyone except the country whose stocks they're tracking. None of this makes tokenized stocks a scam. The wrapped, well-regulated ones are real products with real shares behind them, and the appeal is genuine. Round-the-clock trading, true fractional ownership, and the ability to plug a stock into DeFi as collateral the way you'd use any other token. For a lot of people, the old system locked out. That's a real upgrade. The point is just to know which layer you're standing on. So when someone tells you that you can own Apple on-chain now, the honest version is, you can own something that tracks Apple, issued by someone you're trusting, inside a structure you should actually read. The price might be real. Whether it's a share or a claim, or just an IOU with good marketing, that's the part worth checking before you buy. We cover crypto on the days that actually matter, with explainers when it helps. Hit subscribe so you don't miss it. We'll see you next time.